Good morning, traders. It is Wednesday, the 19th of November, 2025, and today is International Men's Day. I guess that's good news in case there's men out there that need to be international. Maybe one of the few things the United Nations actually got done during its tenure. I don't know. Didn't look it up. No real house cleaning I wanted to do today, other than to say thank you again for the new listeners. Had a bunch more new people come to the table to start listening, and appreciate that very much. Tell people all the time what I really am trying to do with this small amount of content that I offer every morning is to raise awareness for trader education and training in the area that's most significant, in my opinion, which is psychology. And my entire system catalog for everything I've done since I started working in this field in 1986 is online in a library format, netwinningtrader.com, and it is definitely uh, material that will improve your performance. So I want to raise awareness about that. So for those of you that aren't aware that that's what I offer uh, as a tool set for those interested in better performance, feel free to check it out. Also, don't forget for you new guys, I do a broadcast every Saturday. It's recorded. It's not live. It's my weekly performance summary. I show you the results for real time trading. I trade these markets every day, just like you do, and I put my performance out there to show you that I'm a real guy and that I've got really actionable material. So I'd like you to come and see that too, and that'll be available every Saturday, with the exception of the Saturdays in between the holidays. So we're going to do our last one for November on this Saturday, the 22nd. It's going to be a light trading week next week anyway with the holiday. We're going to be closed on the 29th, and I'll be back on December 1st, business as unusual. So we'll look forward to a closeout of this week, short week next week, and then back for what we can find in terms of opportunity through the end of the year. Well, that being said, let's go ahead and get to today's Trader's Daily Discipline. Um, Got a short thought for you today to get you started, but I hope you like what you hear. An economist is an expert who will know tomorrow why the things he predicted yesterday didn't happen today. And that was said by Lawrence J. Peter. And for those of you that have not heard the name before, you know what he did. He's the guy that developed the Peter Principle, which, succinctly put, means people are promoted or rise to the level of their optimal incompetence. People are promoted based on past performance until they get promoted to a point where the skill set they have doesn't match the needs of the job, and therefore they stagnate, producing nothing. And this is how we end up with, incompetent people in public office and running major corporations and heading up school districts and all that fun stuff. So, for those of you interested in learning more, it's the Peter Principle, published in the late 60s, early 70s, I think. And the author, of course, Lawrence J. Peter. So, what I wanted to bring to the table here for you guys, as traders, if you replace the word economist with the word chartist, you'll understand my meaning. Now, for those of you that aren't really aware, I am absolutely no fan of technical analysis. I personally believe it is one of the biggest scams going for those people that promote it, and I personally uh, can prove without a shadow of a doubt, and I have done it, and I've got all the documentation to show you that technical analysis really is a complete and utter economic, um, mathematical, and logical fallacy. It cannot work. It does not work. And people who believe it works, those are the people that are trading based on what goes on in their own head anyway, not what any chart's trying to tell them what to do. Now, why did I tell you all this today? Well, the reason I want you to consider this possibility is because we're entering a time of year, the end of November, beginning of December, when things change just for a period of time, and they offer some strange opportunities while taking other normal ones away. In other words, the quality of the markets tend to shift a little bit in the last 30 to 45 trading days of the year. And the reason behind that has everything to do with how people perceive themselves, the world they live in, and the world they trade and work in. What I mean by that is that by the end of the, most people use December 31st as their day of reckoning. That's the end of the year. They base how well they did as of that date. They file their taxes as of that date. They look at their growth, their performance, their things that they've accomplished as of that date. And what do we typically do? Almost every single person you'll ever meet has a New Year's resolution. I used to call mine my New Year's revolution. Something I was looking forward to, accurately and wonderfully changing for the year and permanently in my life. Sometimes they stuck, sometimes they didn't. But the point is, the quality of the markets change because the quality of the thinking of the people playing changes. Many people disappear during the month of December. A lot of guys, I can tell you from personal experience, because I've seen this happen, they get paid their annual bonuses sometime before the end of the year so they can have a very Merry Christmas, a wonderful Happy New Year, and get back to work in January. So a lot of hedge fund managers are gone. They're not executing. They may have resting orders, but that's it. They're not doing anything. Their staff is on vacation. A lot of private traders take time off. They don't trade anymore at the end of the year. They take a couple of weeks off and enjoy the holidays. Volume drops precipitously. People who do international business are not moving money around. So the capital flows in foreign currencies tend to dry up a little bit. So what I'm trying to communicate to you is that it's not uncommon for charting or things that you trust to start going wrong around this time of the year, and you can't figure out why. And I want to present to you the reason why is because it's an illusion to begin with. And when price action, which is based on people's behavior, starts falling outside the norm, volume and open interest start changing, open high-low closes fall on the outside edge of the bell curve for normal or typical, spreads, typical ranges, outside the bane of what we would call normal, average, or typical in a daily moving price. You'll see markets that make big moves for no reason. And there's always what they call the Santa Claus rally, that happens in equities. So I think it's important for us to remember that be very careful coming up through the end of the year. Now, if you're a big believer in charting, if you really think that works for you, good for you. Feel free to keep using it till all your money's gone. You're welcome to do that. But if you're going to trust that stuff, now is the time to be extra careful that you don't make classic trader mistakes using charting, which is trust it at 100%. That's a big problem. And the reason why most people who rely on charts and graphs and studies and all the rest lose money consistently is because they're expecting it to do something it can't do, and they're believing that it's going to show them how to reduce risk, neither of which is possible using charts and market study. For those of you that say, well, I've never heard that before, I'd like to know more, feel free to get in touch. We'll talk. And then also you have details at netwinningtrader.com, and there's other broadcasts and free material that I have that'll show you that. So if you're interested, feel free. I'd love to know more about your point of view. Keep those cards and letters coming. If you really like this broadcast, I'll do more on these topics if you like. But for today, just to close up shop for this morning to get you back to work, I just want to remind you to be careful with this time of the year. Things can get a little dicier. And when they do, your charts are going to get worse, and they're not going to help you as much as you thought they might. So it's okay to take a step back. It's okay to reduce your size a little bit. It's okay to just take a break. It's the holidays. Feel free to take a week or two off and just observe. Study a good book. Read something new on the markets. With that being said, I'll let you get back to work, guys. I'll see you tomorrow on Thursday. And in between now and then, have a great day. Thanks.